Welcome to this community update call, where we'll be answering some of the most common questions that you guys have come up with. We'll also do a small recap of some of the recent events, what to expect going forward, and we'll also talk about a few topics from the economy and crypto space in the world that have caught our attention.
Hey, yes, it has definitely been an interesting year. Many events have unfolded that we didn't see coming. Probably the whole world didn't see them coming.
For sure. And there have been ups and downs. But for us, from the bright side, last February, we reached to a point where all the coins meant for distribution got distributed. And there were 6 billion coins set aside that were meant for helping to increase the usability through partnerships with companies, organizations, the communities, exchange platforms, and so on. Now, out of the 3 billion that were meant for distribution, 450 million or 5% were reserved for the team and employees. And 2.55 billion coins have been allocated to community members, so currently owned by users and merchants. Now, out of these 2.55 billion coins, about 800 million are currently in users' wallets. About 1.6 billion is stored by the users in their 𝙈 accounts, and the remaining 150 million are on other platforms. Now, many people, they use 𝙈as a secure vault where to safekeep their coins or majority of their coins. So just in case something would happen to their devices or wallets. But if you have done your wallet backup, you are keeping it securely and you do not give access to your wallet to other people, then you should be fine holding your coins in your wallet as well. But as an extra layer of security, you can of course use Grow. We never know when human error might come in play. So another thing we all expected from last year was the launch of the DeFi lending platform that our community had a chance to participate in. It didn't happen in 22, but by now they have made a soft launch. They call it the private launch, and it is to their initial test group. But they are planning to come out to public and to public exchanges in the next couple of months. And the positive side in launching a product a bit later is that a later launch gives the team more time and the product more time to mature.
So we can expect a better product than before?
Now, I would like to think so, yes. So, but in addition to hurdles they had with the tech and also the war between Russia and Ukraine affected them a lot. But one of the main aspects of launching later for them was a strategic decision, and that was due to the market. Now, their product is pure financial product, and launching a product during bear market is a very difficult situation to turn into your favor. So they have been waiting for the market to turn positive to then come out and ride the wave, not to go against it.
Chris, but let's stop here for a minute. We have never been in favor of speculating and trading with crypto. So we have not spoken about behavior in different market conditions. Yet the market has affected our decisions in building the community and products. Do you want to give the listeners a short summary on how the market cycles run?
Well, yes. Okay. So the market cycles in crypto and in general, I'd say they have 4 phases. So the first one is the accumulation phase. Then comes the markup phase, distribution phase, and followed by the markdown phase into another accumulation phase. So the market cycles go like this. Now, the accumulation phase is more or less sideways movement after a huge market crash. This is the time when people feel that the worst is behind, and long-term players and big investors accumulate a lot of assets as many people have actually lost hope and are selling off at a low price. So that's where the name accumulation phase comes. Now, this sideways movement where price stays more or less the same, but the time moves on. In market cycles, it's mostly followed by the markup phase, which is also called the bull market. Now, during this phase, the price is consistently moving in an upward trend, and the majority of the market is optimistic towards the future. They're willing to pay higher than normal prices for the assets, and this increases the prices, general prices in the market. Now, during this phase, the new price records are very often hit, and everything seems like a perfect dream. Everybody feels like an expert. Up until the moment, the big whales feel that it's time for them to take out profit and start selling at the very peak. And this is when market enters the distribution phase. So that's when the early movers are selling, and this catalyzes a shift throughout the market. So there are mixed opinions, and the market is divided into two. Some believe that the market will still go up, and some feel that the best is over. And there's this mixed feelings. They cause fluctuation in prices, but in a fairly consistent price range. Now, as time goes on and more unfavorable and negative media and articles come out, spreading more doubt and fear, the market starts to sell off, or the people in the market, they start to sell off. And with this, we enter into the markdown phase, which is also called the bear market. Now, with the bear market, the bubble has just bursted. There is no new capital coming to the market, and existing asset holders, they are selling off their holdings, and this causes a steep decline in prices. And the decline continues until people start feeling that the worst is over, and the market enters into a new accumulation phase.
So this is where we are right now in current market.
Correct. Well, at least it seems so. This is generally how it goes. The exact moment is quite often, especially in the transition from one to another, difficult to figure out. But since the inception of Bitcoin, crypto market has gone through several market cycles. Most noticeable bull markets were in 2013, 2017, and the last one started in the end of 2020, going through the whole 21. Last year, 22, was a very difficult year for the markets, for crypto as well, especially. A lot of people got humbled. 21 ended with prices tanking, and this continued in beginning of 22, which resulted in many prominent companies and traders misjudging the market. Many of them had actually a very good track record, but in some cases greed, in some cases arrogance caught up to them. So Terra, for example, was a prominent crypto network by Terraform Labs from South Korea. They offered an algorithmic stablecoin, Terra USD, or with ticker was UST, strong T. So and that gained immense popularity. They also created a coin called Luna, which was one of the biggest gainers in the last bull market. Like went from $0.50 to $115. A lot of people made ridiculous amounts of money with that. So when regular stable coins are pegged to a more stable fiat currency and backed by liquid assets, meaning cash or cash equivalents, then algorithmic stablecoins, they use smart contracts to stabilize the price of the coin. Now, in Terra's case, the price stabilization was tied to its sister token Luna, where the model was designed to even out supply and demand for Terra USD.
Chris, I think it would be good if you explain this a bit more. I believe most listeners are not aware how this worked.
Well, so if Terra USD price became higher than $1, then the protocol incentivized the users to mint more Terra and burn Luna, thus increasing the supply and lowering the price of Terra, and at the same time decreasing the supply and increasing the price of Luna. So if Terra USD was lower than $1, then the protocol incentivized the opposite behavior. Now, in stable market conditions, this worked well, as most of things do. It's the rough waters that test the ship, and it took a bit bigger selling pressure from the market that threw the balance off, and Terra USD depegged from $1 price, causing an even bigger sell-off out of fear. Now, this resulted in minting more Luna tokens, and not only a few, but there was a massive supply increase, tanking the price of Luna as well. So both of them ended basically at zero. Luna fell in a matter of days from was like $90 to something like 0.0001. Now, as a result, $60 billion of market cap was wiped out to basically zero.
But that was not the total impact caused by this.
Oh, no. You are right. Yeah, it was such a big crash that it also impacted Bitcoin and subsequently all other cryptocurrencies, as they have always followed what Bitcoin does. Now, the result was tanking crypto prices and the huge wave of margin calls for retail and institutional investors. One of the biggest cryptocurrency hedge funds, 3AC or Three Arrows Capital, which was managing somewhere between $10 to $15 billion in assets. They filed for bankruptcy, and they still owe about $3.5 billion to its creditors. Now, that fund had significant investments and holdings of Terra USD and Luna. Now, one of their creditors was a crypto brokerage firm called Voyager, and they had more than $650 million given out as a loan to Three Arrows Capital. Now, imagine the situation: like you're a brokerage firm, you have a loan that is not paid back. At the same time, the crash in crypto has caused panic in the market and fear, and all asset prices have fallen. People were doing so-called crypto run, or similar to a bank run in traditional finance. And Voyager was just unable to pay out the money to the customers. Now, this ended up in insolvency and another 2 to 3 billion lost.
Wow. But similar thing happened to Celsius, the biggest crypto lending platform. If I remember correctly, then that was about 5 billion loss. I remember reading articles one after another, how companies fell.
Yep. And well, in total, the chaos caused by Terra Labs resulted in about 300, don't quote me this, but something like that's $300 billion of loss across the crypto market. And we can say that it was a really rough first half of 2022. But it got even rougher in the second half. It was November 6th, the date when information about the liquidity crisis of the third biggest cryptocurrency exchange, FTX, surfaced. It was a centralized exchange. Yeah, well, 10 days later, FTX filed for bankruptcy, and I think it was about 8 billion that they owe to more than 1 million people who were not able to get their funds. And the reason for that was pure mismanagement of the FTX corporate funds and the customers' funds, meaning that the company was using, trading, speculating with the money that actually belonged to their customers. And of course, market was crashing, market was down, and they lost. So this unleashed another series of events that nobody expected, even in the worst dreams. It's many funds, many financial institutions were holding their assets in the FTX. So one of the very prominent victims in this case was Silvergate Capital. That's a bank that was focusing on tech startups and crypto companies. Now, they didn't have investments in FTX, or they hadn't given out loans to FTX, but what they had was a lot of deposits from FTX customers. Now, obviously, those customers, when starting to pull their funds, they caused a liquidity issue for the bank. Now, to maintain liquidity for bank's other customers, the bank needed to start selling their own assets, mainly bonds, but that they had to sell them quickly, so at a loss. Now, this frightened other customers in the bank, who in turn started to pull their funds as well. Now, Silvergate took over $1 billion in losses, while customers pulled out about $8 billion in funds over a very short period of time. And this year, March, Silvergate announced its liquidation. Now, this ignited a panic about banks who had high exposure to crypto assets, also to crypto and tech companies and startups. So venture capital investors and founders, they drained their accounts. For example, in a bank called Silicon Valley Bank, leading to its seizure by the regulators.
Silicon Valley Bank was the 15th or 16th biggest bank in United States, with more than 200 billion in assets under management.
Yes, and all of those assets ended up under the control of US regulators, and this in turn led to pressure on Signature Bank, which was strongly focusing on crypto industry, with close to $20-something billion of deposits from digital asset related customers. Like, even though the executives believe that they are able to manage, and they had managed to stabilize the situation, the US regulator stepped in, removed the bank's top managers, and decided to close it. So $110 billion of assets again went under the control of the regulator. So the takeover of these banks raised a lot of questions, as there was no objective reason to seize them, especially in case of Signature Bank, because looking at the fundamentals of the bank, the insolvency was not there.
So that means in a short time period, crypto industry lost 3 major banks that were supporting the industry. It seems that regulators, especially in the US, have really started to attack crypto-related companies.
Well, I guess they see a growing popularity of crypto and the disruption it is about to bring to the financial system. You know, whatever is wrong right now, whatever unpopular monetary decisions the Federal Bank or United States Federal Bank of United States or other central banks in the world make, there is always a claim and explanation how these steps would not be done when we would be using crypto, and how things would not have gotten as bad as they are now if we had been using cryptos. So it's a power play that is happening, and obviously regulators are in a much stronger position to scrutinize crypto industry than crypto industries to do anything against regulators.
Yes, but here's the thing. Let's look at the major economic developments in the world and think ahead. Right now, everybody is talking about extremely high inflation rates. The Fed and other central banks are raising interest rates with hopes of bringing down the inflation. This is causing challenges to individuals, companies, and financial institutions who have loans and credits which become more expensive to service. There are monetary decisions made in the past that are starting to show their effects now. These are the issues the regulators should focus on. Last year in March, United States President put out an executive order on cryptocurrencies, where one point was to drive US competitiveness and leadership on a global scale when it comes to crypto development and also digital asset technologies. Same year, US regulators attacked the biggest crypto companies like Coinbase, Binance, BlockFi, the banks you mentioned. So what is going on? We should be looking towards crypto as perhaps a potential solution to some challenges, something to use in their favor, not something to attack.
Well, there are multiple companies and initiatives that have addressed some challenges surrounding banking and international remittance solutions. Funnily enough, the most potential projects to really help people and to solve their challenges have been hit the hardest. So Ripple being, for example, being one of them, that it's a project that is seen as a potential threat to the current Swift messaging system that's currently in use by most banks and central banks. So all it would be actually doing is improving the fund transfer mechanism, which in turn would support the international trade and then global relationships. But they have been going to court with the SEC, so the Securities and Exchange Commission, for years, since 2020. And over a question that could actually be agreed upon quite easily, but no, it sure seems that SEC really wants to track this as long as possible to cause headache to the whole crypto space. And reasonable regulations is always welcome, but they come on, prioritize this and let the industry innovate and move forward, create value. Now, I would say that in a similar way, we got attacked last year in October when Estonian authorities detained us on a suspicion based on their own wrongful claims. The statements they had against us were either complete lies or based on information that was taken from wrong places, meaning that they were also wrong. So their main point was that we have given wrong numbers of users and merchants so that the price calculation, according to them, was based on wrong numbers. Now let's look into this. So the fundamental pricing is based on numbers of users, which is the coin holders, and numbers of merchants. Now, this actually comes from the basics. Money is an agreement between people. Agreement is based on trust that the government supports the value. Now, if trust towards government is weakened, then belief towards currency is decreasing. People will sell and the price will drop. Let's do a simplification. Price is based on people, basically. So it can be tested with any bank run, and there's your proof. So coming back to the fundamental pricing model. Now, merchants themselves have listed their business on the website and confirm that they accept crypto payments. That number with the list of merchants has always been publicly visible. For the number of users, they only looked at a certain number of wallets on the chain, not even considering the whole community, not considering the fact that majority of users have not transferred their coins from their back office to the wallets. So it's not visible on chain. And this was actually publicly stated information already before, but they did not consider this. They also did not ask or inquire anything before. And this makes it even more weird. Now, to be honest, it makes it pretty clear that there was some kind of wrongful or illicit agenda behind this step to try to bring us down. And well, they collected and we provided information proving their statements as lies or being wrong. And we know where we stand and what we have always wanted to create. That's a good payment solution for people all around the world. Yeah, fine. They attacked us. We took a hit, but we're not giving up on the vision of creating a digital currency that people can use for payments globally. Now, the world needs digital currencies. The fact that Europe has fast but discriminating banking solution does not give any government employee without financial education the right to prevent the rest of the world from having a good financial system. This would be wrong both ethically and morally.
We should take this as a small hurdle, something that challenges and tests you. Over the years, actually, we have been tested so many times.
Mm-hmm.
Started in early 2017. We were looking for a solution that was capable of handling more transactions than other solutions back then. We chose the DAG, or directed acyclic graph, as a mathematical principle. DAG is an old and known principle, but using it in a distributed ledger was something new. When our team was working in getting the coin listed on exchanges in mid and also end of 2017, as we had a plan to list the coins already in the beginning, they faced huge difficulties. We were only talking to the bigger exchanges, but they were not really interested in working on a technology other than Bitcoin or Ethereum blockchain, because that was the time when crypto was booming. There was a huge hype, so exchanges had a long list of applicants with all kinds of coins and ICO projects that were tokens built on Ethereum blockchain or coin that had taken Bitcoin or Litecoin blockchain and modified it a little bit. In either case, it was easy integration for the exchanges, as they had done it multiple times already. With our technology, it could have been something new with extra work.
Yeah, for the exchanges, it was easy money to charge the listing fee and list one after another quickly. So taking a more complex task with DAG was definitely not preferred. And most of the exchanges they didn't even give any response to our inquiries. And but yeah, sadly, majority of those coins from back then, they don't even exist anymore. And I think also many of those exchanges are not there.
This hype was shortly followed by a huge crash in the end of 2017.
Yep.
And also 2018 beginning.
Yeah.
Volatility with ups and downs was nothing new to crypto. After such a hype, there were a lot of new people freshly invested in crypto who lost a lot. It was a huge bloodbath, which affected a lot of people, especially the opinion that most of people had about crypto. If one loses money with something, most people don't think they did something wrong. They think it was always the fault of others or the assets.
Any financial instrument, may it be an investment, an asset, a currency, it can work in your favor if you know how it works and how the markets work.
Indeed, this made us think about the pricing of digital currencies and led us to introduce fundamental valuation based on users and merchants that would help people in the crypto space to move from the mindset of speculation and investing into cryptocurrencies towards using cryptocurrencies. And this has been our aim from the beginning and has been the purpose of cryptocurrency from the get-go. Having stability in the price is a requirement for a usable currency.
Mm-hmm.
Fundamental valuation works if it is respected and honored by the whole community. This means that people and merchants using a fundamentally priced cryptocurrency should be on one page and agreeing to a certain price.
Mm-hmm. You know, over the past 4 or 5 years, we've spoken a lot about technology, blockchain and distributed ledgers in general. We have broadly explained the different benefits that crypto has and how it can help and improve the lives of billions of people through numerous use cases for individuals or like for both private and public sector. And our narrative has always been the same. Cryptocurrencies for using, transacting, and should not be treated as an investment vehicle. Tokenizing assets is a different conversation, but cryptocurrency as a payment vehicle should not be speculated with. And this message is what we have tried to incorporate into our community, and I would say to a certain extent we have been successful with it. Obviously, the bigger the community grows, the more difficult it becomes to maintain a unified mindset, especially if this is not a very popular one yet. And so the tendency is that if a human sees a shortcut, he'll take it. And there are so many temptations in crypto space that it's difficult to shift one's mindset away from them. And the only way for such an innovation to prevail is to build a community that transacts and interacts with each other, and then to expand and scale to outside. So first internal community and then to outside. And since 2017, we've been working on getting our whole community to be and act as a whole, to be then able to scale the outside world. It was a work in progress. Perhaps we were too early. Maybe the fundamental pricing concept is too big to see. I don't know. It is simple though, and it sits on the basic foundation of any currency.
We can say that the case from last year has made it a lot more difficult for us to build a community based on this concept or principle. There was a suspicion. There is no accusation even. Nobody has been found to have done anything wrong. But some media has taken a stand against us, harming our reputation in a very bad way. This has hurt our community a lot by making it much more difficult to explain the fundamental pricing model and to scale, to grow the existing community. It has also made it very complex to create partnerships with companies and other projects, especially as financial sector is very, very sensitive towards any negative media.
Now, to carry out such an attack on a project that is still in development phase, still in creation, it puts the whole success of the project in jeopardy. So we were forced into making a decision. Option A was that we do nothing and we accept that an Estonian prosecutor with her unproven statements in the news has given our project a fatal blow. Or option B, we take it as a hurdle, adjust our course, and continue to build on the new course. We didn't put in 6 years of sweat and tears to give up on something we strongly believe in. We have amazing people in our community who have supported us and our vision, who understand and believe in the positive impact crypto can have on people's lives. I say we adjust and we continue.
100%. We keep on working to develop a cryptocurrency for transacting and making payments from peer to peer.
So after looking at the pros and cons of possible scenarios on how to continue, discussing with some of the people in the industry, considering the needs and wants and asks from the community, the best way forward is to have the coins listed on an exchange platform that is globally accessible. So whoever wants to buy and buy or sell coins has a platform they can access, not only from Europe, but worldwide. Now, obviously, this step has its ups and downs. So, for example, we would move away from the fundamental pricing model, as the price would be based on the supply and demand on the exchange platform. The listing price would be the price that people are buying and selling the coins inside the community groups and channels. So from there on, it will be based on the activity in the exchange. So we have already signed an agreement with one of the top exchanges in the world, with millions of users doing several billion of dollars daily trading volume on the exchange. Now, this increases liquidity on the market and gives our members a well-known, secure environment to buy and sell, meaning enter and exit into the coin. So for quite some time, it has been an issue that many people who either want to buy or sell have not been able to do it because they don't know which group or channel to trust. And there are a lot of cases where people have lost their coins due to fraudulent groups. Now there would be a trusted place that everyone can feel that they can use and where they can feel secure. Now, currently the exchange platform is doing the technical integration, so which in most cases takes up to 2 weeks, but as our technology is not very common, then it will be a bit longer. So there is no certain listing date yet, but we are expecting to be ready with the technical part in the second half of May. So starting from first half of June to the end of June seems like a viable time for the listing. We'll provide more specific information as we are ready with integration and setup, so that we know that there are no delays coming, that everything is done. It's just waiting for the date. So there will be announcements on socials to cover that.
This does not mean that we are abandoning the fundamental pricing concept. No, not at all. We still believe it to be a good way to price coins designed for payments. And we will continue to advocate for this concept. Just in our current situation, we are basically forced to take another step. But we will take the maximum out of the situation and work with what we have. This step opens up other kind of opportunities, and it also helps to save some partnerships we were working towards before.
And actually, a key thing to understand and to remember is that in the beginning, for a couple of months, there will probably be turbulence on the market, as many people who have not been able to find a secure place where to buy or sell coins, meaning that they have not trusted the existing groups. So they have now a chance, and they will be buying and selling, which is fine, especially as now with the listing on a big exchange, everyone has the possibility to buy and sell without any fear that the other party will not send the coins or will not make the payment. So this is always a challenge with person-to-person transactions without having an escrow service or a trusted third party in between. So another aspect that increases the volatility is obviously the speculators, who will be attracted by market movements. So when I was talking about the market cycles, then whatever market movement there is, they will add to it. So the possibility of market speculation is what makes creating a usable digital currency so complicated. But it is what it is. It is part of the process. It is part of the journey. Just be cautious not to get carried away with any price movement, and just look at the long picture. Managing your emotions and maintaining your cool should be your top priority when dealing with volatility in the market. Just set your thoughts right. Then after, I believe that after the initial turbulence is over, and the dust settles, the price will more or less stabilize at one point, and we continue building from there. The price level is obviously affected by the events from last year, but history has shown that strong communities and projects that really work on benefiting the users can overcome many things. And there are a lot of examples for this in the crypto space. Looking at Ripple's price movement during and after the SEC lawsuit shows that they have a community that believes in what they're doing.
Yes, once the price stabilizes, we should again start focusing on the merchants. Dark software will take the price from the exchange, where liquidity gives possibility for any merchant to convert into another currency at any given moment they want. Meaning anybody who wants to make fast and cost-effective crypto transactions is welcome to use dark coins.
And same time, many of the ecosystem platforms and services that, are also being worked on to adjust to the new pricing mechanism, and they will be updated or relaunched after the listing. One of the most sought after services has been Tag Telecom for the internet and mobile calls. There have been so many people using their coins to pay for their calls over the past few years, and especially in countries where calls have been quite expensive. It's amazing to see it, and this will also continue with the market price. So there are still multiple platforms that in the ecosystem that we have been planning but have not managed to build yet. Now, this current listing on an exchange that has a global reach expands our possibilities to work with a lot more external companies and platforms than ever before. And this also increases the usability of the coin even further. So several of the ecosystem platforms we are looking into creating in a partnership with some external companies.
This also helps to liven up some other conversation we have had regarding usability partnerships, and also to save some. The end of last year really stirred up our plans. So a lot has been going on right now to streamline the best way forward. Looking at the 3 billion and 6 billion split of the coins, we will not be burning any coins right now, nor will there be any amount of coins going into usability partnership. The 6 billion will be kept aside for now until all the moving pieces are in place. Understandably, listing on a major exchange platform changes the dynamics of the coin and the project, and we all want to be sure that whatever decision is taken that is that serves the community and the success of the coin in the best possible way.
Yeah, just to clarify it, so that nobody gets it wrong. It's not that those 6 billion won't be used for partnerships. Most probably will be, but more in the future. We will first see how current situation evolves, and then we decide, we see what is the best use for the community. But this step also, it grows the reach of the community wider than our current existing community. So we need to work on new communication strategy, new communication channels, and social channels as well. So let's get the listing done. Let's see how the market plays out, and continue with the next strategic steps from there.
Absolutely. I also want to add that we still have a few more improvements in the pipeline to enhance the core technology of coin. I believe this is also something to speak about and to be proud about quite soon. So yes, let's go step by step.
There is one more topic that is impossible not to speak about, as we have a lot of people who are interested in currencies and who might be wondering what is going on with the US dollar. Like the US dollar has ruled the financial world since the end of World War II, and that's almost 80 years now. That the majority of global trade has it has been taking place in or through US dollars. And lately the question has risen: is it going to continue, or will there be a change, and will we see more players coming to shape the global markets and the global trade?
Well, the search for alternatives for a dollar started already a while ago. but United States-led financial sanctions against Russia triggered a wave of serious decisions and steps, which for the first time in the history are really threatening to overthrow the US dollar dominance. Western governments have freezed nearly half, it's around 300 billion of Russia's foreign currency reserves, and removed major Russian banks from the SWIFT system. It's an interbank messaging service that facilitates international payments. These sanctions have made Russia and China promote their alternative financial infrastructures. But it isn't just only China and Russia who are involved in the so-called movement of de-dollarization. The fear that the United States and Western governments would someday use this kind of power against someone else has made a lot of governments around the world anxious and looking for so-called backup plan and for alternative solutions to secure their countries and their people.
That also makes sense, because once you're out of SWIFT, you basically lose the ability to transact cross-border. You risk being cut out of the global supply chains, and this would seriously damage the economy of a country.
Yes, and this is why the list of countries who are joining the so-called dollarization is growing day by day. There are countries like Brazil, South Africa, India, Argentina, almost the whole Middle East, majority of Southeast Asia. Nations and regions have accelerated efforts towards arrangement aimed to reducing their dependence on the dollar. And here the question rises, can these movements lead to an end of the US dollar domination? If yes, then which currency will be the new leader of the global trade?
Chinese yuan?
It could be something, at least so. For example, Central Bank of Iraq, one of the major oil suppliers, announced it would allow trade with China to be settled in yuan for the first time in history. So Bangladesh Central Bank has made a similar announcement. China and Kingdom of Saudi Arabia are already transacting with each other in yuan. And United Arab Emirates is selling China's gas in yuan. But there are also movements which are creating new currencies and alternative payment instruments, which should help to make global trade easier. And using cryptocurrency is one of the options here. For example, earlier this year, I think in January, it was reported that Iran and Russia will jointly issue a new cryptocurrency backed by gold to serve as a payment method in foreign trade.
I believe in Financial Times they use this phrase multipolar currency world that is emerging and really creating favorable ground for digital currencies, or for all digital currencies. But this itself can be a topic for a separate call. Anyways, I think that's enough for this time. Thank you, Niels, for having this session, and thank you for the discussion.
Thank you. Anytime.